A fresh escalation of trade war concerns unsettled Asian and European stock markets, although Apple once again provided support for U.S. equity indices as the iPhone maker's market capitalization hit $1 trillion. President Donald Trump fueled an early bout of market nerves after he instructed his trade czar to consider raising proposed tariffs on $200 billion of Chinese imports to 25%, from the 10% originally announced last month. We suspect the president has been emboldened by his success in extracting concessions from the EU with the U.S.'s recent threat of car tariffs, which has been put on ice for now, said Bill Devaney at ABN AMRO. It may also be a recognition that a 10% tariff would have been largely neutralized by the recent weakness in the renminbi. Indeed, the Chinese currency fell to a 14-month low against the dollar while Asian stock markets tumbled, with China, not surprisingly, among the hardest hit. The sell-off spread to Europe, with Germany's export-heavy Xetra DAX index sliding 1.5%, although Wall Street was more resilient. The trade war worries helped the dollar climb back towards the 12-month high it reached against a basket of peers 2 weeks ago, while the yen was mostly stronger. The yield on the 10-year Treasury, which moves inversely to its price, fell back below the 3% level it reached on Wednesday for the first time since June. There was fresh volatility for Japanese bonds, as the 10-year yield hit an 18-month high in the wake of the Bank of Japan's tweaks to its policy stance earlier this week. Meanwhile, sterling found no lasting support from the Bank of England's decision to raise interest rates, which had been widely anticipated. Though Governor Mark Carney sounded notably cautious in the press conference, saying the Monetary Policy Council needed to walk, not run, in raising rates. For this reason, today's rate rise will go down as a dovish hike, said Daniel Vernatza at UniCredit. By mid-afternoon in New York, the more trade-sensitive Dow Jones Industrial Average was flat. Across the Atlantic, the Pan-European Stock 600 index ended 0.8% lower while the FTSE 100 in London shed 1%. China's CSI 300 index tumbled 2.2% to its weakest point since early July, and the Hang Seng in Hong Kong fell to a 10-month low. The dollar index was up 0.5% at 95.09, not far from the one-year intraday high of 95.65 hit on July 19. The euro was 0.6% lower versus the dollar at £1.1585 and 0.6% weaker against the yen at 129 yen and 42 sen. The dollar was flat against the Japanese currency at 111 yen and 71 sen. Sterling was down 0.8% against the dollar at the day's low of $1.3016, and the euro was up 0.2% versus the pound at £0.8897. Gilts were little moved, with the 2-year yield steady at 0.79% and the 10-year flat at 1.38%. The 10-year U.S. Treasury yield was down 2 basis points at 2.99%, having touched 2.975%, while the 2-year yield was 2 basis points lower at 2.67%. Germany's 10-year bond yield shed 3 basis points to 0.46%. In Tokyo, the 10-year JGB yield rose as high as 0.145% before easing back to 0.121%, barely changed on the day. Copyright The Financial Times Limited 2018.